Have you ever heard of ETFs that pay you every single week? YieldMax has been making waves with some high yield strategies, and in this video, I'm going to break down 3 of their weekly paying ETFs and how they've actually performed. Now, these funds aren't your typical dividend ETFs. They're designed to generate income, often weekly or monthly, but they come with higher risk. Lately, they've been getting a lot of attention for one big reason. Some report annual yields between 50% and even 100%. Let's kick things off with the first fund on the list, ULTY. This is the YieldMax Ultra Income Strategy ETF. As of now, it offers a 70% annual yield paid out in weekly increments. Since March 2025, ULTY shifted from monthly to weekly distributions, and the payouts have been fairly consistent, ranging from 9 to 12 cents per share. That consistency is surprising considering this is a high-risk, high-volatility fund. Now, you might be wondering, what is ULTY actually holding? At the time of this video, the top holdings include Applied Digital, AppLovin, and AST Space Mobile. These are volatile, small to mid-cap stocks that allow the fund to use an option-based strategy, specifically a synthetic covered call approach, to generate weekly income. It's an aggressive play, which is why ULTY is generally viewed as a high-risk, income-focused ETF. How has ULTY actually performed? They were launched in early 2024, but if we look at the performance in the past year, it's seen a share price drop of over 50%. It was trading around $14 per share, and now it's closer to $6. This is a classic example of NAV deterioration, something common in high-yield, option-driven ETF that pay out frequently. Now, let's talk about the fees. These are actively managed funds. ULTY comes with a higher expense ratio, about 1.2%. That's something to keep in mind if you're comparing it to traditional dividend ETFs or passive income funds. Now let's take a look at our next ETF, YMAX. This one's officially called the YieldMax Universe Fund of Option Income ETFs. It's often referred to as the fund of funds. That's because it doesn't hold individual stocks directly. Instead, it invests in a basket of other YieldMax ETFs. So far, it's been paying an annualized dividend yield of around 65%, and just like ULTY, those dividends are paid out weekly. YMAX started off as a monthly paying ETF, but in September 2024, it switched to weekly payouts. Since then, the dividends have been a bit volatile, ranging from as low as 12 cents to as high as 31 cents per share. That kind of fluctuation is expected with a high-risk, income-focused fund, especially one built around option strategies. Now, I know you're wondering what exactly is inside of this ETF. Since YMAX is the fund of funds, its holdings change monthly, but at the time of this video, some of their top underlying YieldMax ETFs include Snow, TSM, the Innovation ETF, Gold Miners ETF, Meta, and Google. There's a few more on this list, but this gives you a good sense of how diversified yet aggressive this fund's approach really is. Now let's talk about the price. YMAX is currently trading around $13 per share, but if we look at the past year, it's seen a decline of about 30%. Similar to our last fund, this is not unusual for a high-yield option-based ETF, especially with these frequent payouts that tend to create downward pressure on the share price. Finally, let's talk about the fees. YMAX has an expense ratio of 1.28%, which is on the higher end, but again, this is an actively managed fund. Now let's look at our third ETF, and that is YMAG, the Magnificent 7 Fund of Option Income ETFs. If you haven't heard of the term Magnificent 7, it refers to a group of major tech stocks: Apple, Amazon, Google, Meta, Microsoft, Nvidia, and Tesla. YMAG doesn't hold these stocks directly, it holds the YieldMax ETFs that target each of them individually using option strategies. Combined, this gives YMAG an annualized distribution rate of around 70%. Looking at the dividends, there's been a lot of volatility in the payouts. On the low end, we've seen distributions as small as 5 cents per share, and on the high end up to 31 cents per share, so there's definitely variation. Pretty typical for these high-risk options-based funds. In terms of performance, YMAG is down about 25% over the past year, and that might sound steep, but again, it's in line with the trend we've seen from these other YieldMax funds. These ETFs tend to face this price pressure due to their aggressive income strategies and frequent payouts. Now, earlier we touched on YMAG's holdings, but just to clarify, it holds the YieldMax versions of each of the Magnificent 7 stock. So it's like a bundle of individual high-yield options-focused ETFs for each tech giant, all under one fund. As for the fees, YMAG is consistent with the others in this space, an expense ratio of 1.28%, which is expected for an actively managed ETF. So, what do you think of these weekly paying ETFs? Are any of them something you'd consider adding to your portfolio? Let me know in the comments. I'd love to hear your thoughts. And if you're into investing in dividend content, don't forget to subscribe to the channel. Thanks so much for watching.